Hello there, welcome to the Week Ahead show here on IG, where we analyse all of next week's economic and corporate data so that you can get a head start. That's what it's all about. Now, we close this week with oil falling ahead of the OPEC meeting this weekend. Fears loom over a Chinese credit bubble, and world shares hit a 4-month high. We've also got the dollar as well continuing to gain. So that's the economic picture as it stands. But let's head into next week and see what economic data is going to greet us on Monday morning. Let's go. So we've got China's house price index there, Australia, CB leading indicators, and US housing market index as well. Another busy one on Tuesday, and this is one that we're actually going to analyse in just a minute or two. We've got the RBA meeting minutes, that's coming from Australia, Germany economic sentiment, and US building permits. On Wednesday, we kick off with Japan. We've got the trade balance there as well. We've got the UK ILO unemployment rate, CBI industrial trends as well from the UK, US mortgage applications, US national activity index as well, and oil inventories too. Thursday. Again, Australia, we're going to kick off with the business confidence, France business confidence as well, UK retail sales. Again, that's one we're going to analyse in a minute. ECB interest rate decision, that's a big one. US initial jobless claims and the EU consumer confidence. Friday, we will finish it off starting in Japan with manufacturing PMI, a whole host of PMI data, Germany business climate, Italy retail and industrial sales, Canada inflation, retail sales as well from Canada, and the US manufacturing PMI. So jam-packed. Got Joshua Mahoney right here to discuss all of this and what we should be picking out and putting on the top of our calendars. But we can't go on without discussing OPEC. It's a big one, 17th of April. Are they going to agree to this production freeze or not?
Yeah, definitely. And this is not necessarily one of the ones we're going to completely cover with the charts and everything just because it's over the weekend. But certainly, I think this is going to really set the sort of outlook for the whole week. Now, we've seen it this week. Essentially, I think the moves that we've seen, certainly in the middle part of this week when we see this massive rally, I think it was driven by people really anticipating what could come out of this meeting. Ever since then, we've seen largely flat indices where people are sort of a little bit more hesitant given the fact that we've already seen that rally. So there is the threat that possibly a lot of this has already been factored in, and therefore even if we did get the announcement to say that we could get a production freeze at, say, January levels, there's the potential that we could actually see the market open and crude fall. Now, that just goes to show that actually the markets are quite difficult to ascertain. It's difficult to know exactly what might happen on the weekend. It's difficult to know exactly how the market will open in the morning because of that. And therefore, you know, it takes someone with a strong gut to actually hold positions over the weekend. That's why you're seeing a lot of people actually taking profits ahead of this weekend.
Okay, all right, ahead of the game. Let's talk about the UK, because we've got jobs data, we've got retail sales as well. So much playing into this. We've got to mention sterling, we've got to mention Brexit as well. We had the Bank of England meeting minutes this week, didn't we? So much going on. Yeah,
well, I guess, you know, ultimately we're actually doing pretty well from an economic standpoint in the UK. The one issue, of course, is always going to be inflation. When we don't have inflation, the Bank of England can continue to hold off. We've just seen CPI actually start to tick higher, and that's something that's really happening around a number of the developed countries, and that, of course, is probably going to be influenced by the fact that we're seeing the same kind of thing in terms of crude prices. And therefore, as we continue to see, and obviously when we see retail sales numbers, and again when we see the unemployment reading, as we see continued improvements, and you see also at the same time improvements in terms of inflation and CPI continue to tick up, then that's likely to bring forward expectations in terms of an interest rate hike. Therefore, they will both be very important. I think the unemployment reading is likely going to stay the same. I think the retail sales number is going to be very interesting. Bear in mind that also it's relatively volatile reading, so one month it'll be positive, next month it'll be negative, so it can be quite difficult to really gauge exactly how it's been doing. But recently, every negative number's been quite small, every positive has been relatively large, and therefore we're moving in the right direction. But we'll start off by looking at what's happening in terms of cable, and if we look in terms of the daily time frame here, what we can see here is that essentially we've been trending towards the downside over the last, say, month and a half after we sort of topped off here, but we haven't necessarily been moving in one straight line. You can see the move that we saw back end of December, early January was a lot more clear cut than what we're seeing at the moment, and therefore you're likely to get maybe 2-3 consecutive down days, and that's about that's about your lot, really, and then you see recovery. Now, this doesn't necessarily have to be a bad thing for some people. If they think it's not necessarily a straight line, they might not necessarily trade it. I think that this is a good thing, especially the way that I trade. I like to see trades like this because it gives me good entries at deep pullbacks. So you can see here that we got this top, we pulled back, and we actually surpassed this 76.4 retracement, which is a level that I generally look for. Haven't got it drawn on here, but that is a very deep retracement, so it definitely has. On this occasion, we've pretty much come to the 76.4 and started to sell off. What we're seeing at the moment is a retracement, but what we can see right here looks pretty much exactly the same as what we're seeing here on the sort of overnight session between the 1st and the 4th. So I think that what we're seeing at the moment is simply a pullback. I do think we're likely to break towards 1.4 once more, and therefore I think the week is likely to start on another weak footing for cable. And I think what we're seeing here is a topping pattern set within, if we bring it back out to the daily time frame, set within a clear downtrend. So we've seen a resurgence, and now, to me, we're actually seeing a very considered move lower, and at some point we're likely to drop down. 1.4 I think is likely in the near term, and then we're likely to drop back down towards this low 138.30.
All right, let's go down under and talk about Australia then, because there's 3 big news releases, isn't there? So we've got Monday, CB leading indicators. Tuesday, the RBA meeting minutes. They didn't change their rate, as we know. And then Thursday, NAB business confidence as well. So Aussie dollar, presumably you're going to watch on the back of all of that.
Yeah, and Aussie dollar, I guess, is keenly tied into the whole China story. And this week's actually seen China come back sort of out of the wilderness, so to speak. You know, we've actually seen them post some pretty good numbers. Export numbers are really good. Imports were better than expected, but still in the negative territory. Also saw some strong figures coming out today, albeit nothing compared to what we'd seen, say, a year ago or 2 years ago, but certainly improvements in terms of, not the GDP, that actually ticked low, but we did see improvements in terms of lots of industrial production, retail sales and alike. So certainly it's starting to turn around, and people want to get ahead of the curve, and we're seeing the Australian dollar really picking up very heavily in anticipation of a continued pickup in terms of China. People are starting to think this could be a bottom for China, and that's likely to really have a big impact on Australia. RBA minutes are going to be very interesting to see exactly what their standpoint is. I don't think they're necessarily going to be doing any sort of cut within the environment where they're actually improving, as we're seeing at the moment. So, you know, RBA minutes are always going to be important, but I think that they're likely to be fairly satisfied by the environment that they're seeing at the moment, given everything they've been through in the recent months and the recent years. So we're going to look at what's happening in terms of the Australian dollar. Again, we're going to start with the daily time frame. What we can see here is that we've got this very strong rally pretty much since the middle of January. And now what we're seeing at the moment is, again, a similar kind of thing from what we're seeing in terms of sterling. Of course, it's in reverse, but what we're seeing is very deep pullbacks set within an uptrend. That suits me personally because I like deep pullbacks for me to be able to get into a trade to then get very good risk to reward for continuation of that trend. Now, I would be wary about this for the time being because of the fact that we have clearly surpassed the previous high that we had at the back end of March. Now we've started to set these long upper shadows, same kind of thing from the previous tops that we've seen. So if we look in terms of the hourly time frame, we can see here we've got a potential double top coming into play. So we have an uptrend. We have an uptrend that generally has deep pullbacks, and we have a potential topping pattern coming into play here. So there is a potential for us to see a little bit of downside for the Australian dollar, but I would see any downside as an opportunity, and an opportunity to get long once more. So I'll be looking at the Fibonacci levels once more and seeing if we can get another deep pullback. But that would be considering a close below this 68.60, which also coincides with a 23.6. That would be the neckline of your double top formation. We get a close below there on the hourly time frame, starts looking towards a move towards the downside, at which point you'll be looking at these Fibonacci's for support.
All right, Eurozone PMI, we've got a whole host coming up on Friday. We've got Germany, France, Eurozone. What are you expecting then?
So I think this is set within a story of a wide improvement within the Eurozone, whether it's coming from policies from the ECB or not. Ultimately, we are seeing an improvement. We're seeing improvement in terms of unemployment, albeit from relatively high levels. And the story really is about, can we see the same kind of thing in terms of industry out there? Manufacturing has been suffering worldwide recently, the same kind of thing in terms of the UK, in terms of the US. You know, how are we going to see the Eurozone fare, and what kind of impacts that can have? PMIs generally do have a decent sort of impact in terms of volatility within the market, so it's going to be interesting to see how these react. I thought that we'd look at the DAX. Now, personally, I think with the PMI reading, we're more likely to see a response in terms of the euro, but this gives me a good opportunity to look at the indices other than the FX, which is what we've been looking at more recently. So this is the daily time frame in the DAX, just to show you the crucial levels that we're at the moment. We've got these circles where we're hitting this major trend line or horizontal line 101.21, previous support turned into resistance, now resistance once more with that 200-day SMA. So there is a potential that we could see a market top around about this level, and if we don't see a market top, if we get a close up above this level on say a 4-hour should do it, then that could actually spark another big rally for the DAX. So I'm not necessarily saying I think we are going to see a market top here, but I'm saying we are at a key inflection point for the DAX where we could either start to see it turn lower in a very convincing manner, or we could see quite the opposite and we see a breakthrough here and a sort of runaway rally towards the upside. Considering the fact we don't have any big resistance points up until 105.24, if we did see that break towards the upside, it could start to get pretty crazy. Considering the moves that we've been seeing this week, you know, there is a potential for some really big moves in terms of the DAX.
Ooh, getting crazy. We like that. That sounds exciting. And of course, we've got the ECB decision Thursday, the meeting coming up, so we want to all watch out for that one. But let's crack on and talk about corporates, because we're still in earnings season. We've got some huge names. Let's go for it. On Monday, Rio Tinto. That's going to start it all off. We've got Netflix as well, if you like a movie or two. PepsiCo in there as well. Morgan Stanley. We've had some loads of US banks as well. Also Tuesday, tech stocks are big news next week. We've got Yahoo going on, Intel as well, Johnson & Johnson, and again Goldman Sachs, another financial heavyweight coming from the States. Wednesday, we've got BHP in there, Arm Holdings as well, one to watch out for, and Coca-Cola as well. Thursday, we've got Sky as well, the media giant. We've got Ladbrokes as well, Go Ahead, Starbucks, Amazon, Alphabet, Google, obviously that's involved with that, Microsoft too, and Friday, General Electric is in there. If you like a burger, we've got McDonald's and Caterpillar too. So some huge names in the corporate world. Let's get over to Josh again for more analysis on which one you're looking out for. Rio Tinto, what do you make of this one? Because it's been embattled, hasn't it? This whole sector's been really struggling.
Yeah, definitely. And it's the same story in terms of, do we think that we've essentially seen the bottom in terms of what's happening in China? And that's going to have a massive impact on your expectations for like Rio Tinto, heavily geared towards iron ore, which again, the major demand comes from China. So ultimately, this is a play on China. And we have started to see a resurgence in terms of Rio, same kind of thing that we've seen across the commodity sector as a whole. A lot of people saw this very good buying opportunity, because for the long term, if you want to hold for the next say 5, 6, 7 years, it's likely that we're going to see the likes of Rio and some of these big names, BHP, higher than we are at the moment. So really there's quite a lot of long-term people that I know investing in the likes of Rio and alike. On the charting perspective, we've come into a really interesting area of resistance. This is a weekly time frame that I'm looking at here with 2262, which is not only the 50-week SMA, but we've also got this major resistance point. You can see 7th of March, or the week of the 7th of March, that we hit that high previously. So really it's all about the ability to break through this level. You see we've got trend line, previous resistance turned into potential support. So while we are selling off at the moment, you know, we do have that to contend with alongside that 200-day SMA. The key here is the fact that we tried, you can see we've got this strong rally coming into this big resistance level and then posted that little doji yesterday and have now started selling off. So that's not a particularly great sign, quite honestly. We need to clear out this 2262 for us to actually become bullish once more. But certainly this is moving on a bit more of a positive path, considering the real massive downtrend that we've been seeing over recent years.
Yeah, the only way is up. Also, want to talk about US banks. We've got Goldman Sachs. We've already had a plethora this week, haven't we? And it seems like expectations are so low with US banks that actually people are quite surprised that they're not as bad as they thought.
Yeah, exactly. That's been the story of the week, essentially. You know, we saw JP Morgan at the beginning of the week, and as soon as they came out with relatively decent numbers, or what the street perceived as relatively decent numbers, all of a sudden sort of whole sector rallying. And the same kind of things really fed through the week. We've seen Bank of America, they actually saw, you know, massive deterioration in terms of profitability, yet the shares rally, and that's all down to expectations. It's down to people selling in anticipation of it being worse than it actually was. Citigroup, same kind of thing that we've seen today. So this is going to be a continuation of that same play. They're heavily geared towards the sort of investment side of matters, and I don't think that their expectations are particularly strong for that either. So quite honestly, we have a running trend, and that is heavily oversold, very low expectations, and 3 out of 3 so far have actually outdone expectations, and we've seen them rally. So what am I to say, or who am I to say that it's going to do anything different from what we've seen so far? From a charting perspective, you can see, as we were talking about, heavily oversold or heavily sold into anyway, and you can see over the last month or so, we've essentially been sort of rotating within this range. You can see around about 161 to the upside, around 148.60 to the downside. Now, we have come into the 200-day SMA, posted that sort of long upper shadow, and now we're looking like we could possibly turn lower. So with the fact that we have got this sort of range in play and we have got this clearly defined sideways price action, I'd need to see something that's fairly convincing that we're breaking out of this. You could be looking at this as a potential trendline resistance to come into play here, but ultimately there is a potential for us to actually start turning lower once more. And the fact of the matter is, yes, they have been sort of outdoing expectations, but ultimately these banks are not particularly faring too well. It's not a good environment for them with such low interest rates, and therefore there is a potential that we could start to see this as a top and sell off back down towards the 150 mark in the coming week.
It's a big week for tech stocks, isn't it? And a force to be reckoned with has to be Amazon. It's difficult not to be impressed by this company.
Definitely, you know, it's exactly the type of company you want to be investing in, but unfortunately Amazon seem to have a problem that everyone has such high expectations of them that they find it quite difficult for them to actually achieve what everyone expects from them. You know, it's quite the opposite from what we're seeing with banks. You know, such low expectations that you can still see 30% wiped off your profitability, and you'll still see everyone start to buy because they think it's great. Whereas Amazon, you know, they'll see an increase in terms of revenues and sales and profitability, yet you could see their shares actually sell off as a result. So, you know, it's a difficult one because of that. What I can say is that we've seen what looks like clearly a bottom. We've got this V-shaped bottom in terms of that move lower in February, and people have been fairly consistently buying it up ever since then. We saw a marginal tick lower in the middle of March, but now we're pretty much set on a path back towards the highs in the back end of December 2015. Therefore, it's a case of just trying to get into the trend, in my opinion. You can see on the hourly time frame, generally you'll look for those major swing lows and swing highs and try and see any sort of decent pullback to try and get a decent entry and a decent risk to reward profile. So I'd be quite happy to be getting in long on Amazon. I think it's a matter of time before we get back to those highs in December. It's just a case of getting in at the right time and getting in a good position. I don't necessarily think it's going to get back down towards this sort of 60 or 610 kind of mark, and therefore, yes, we're seeing a little bit of a pullback at the moment, but I think before long we'll be rallying once more. As I said, be careful of the fact that largely people have such high expectations for Amazon, they often can't fulfill them.
All right, as you say, opposite to the US banks, but thanks very much indeed. That's Josh telling us all about next week and what to look out for. That is how the week is shaping up. We've got UK job and retail sales to watch. We've got Eurozone PMIs, the Aussie dollar is going to be in the spotlight. Corporate news, we're watching Rio Tinto, Goldman Sachs and Amazon. If you want more information and analysis on each stock near at the time, join me every day for the look ahead, the daily programmes. But that's it for now. Have a fantastic weekend. Goodbye.